The IRS has listed counties eligible for an extended replacement period for drought sales of livestock. Owners in the specified areas now have at least until the end of 2025 to replace the involuntary converted animals. Roger McEowen with the Washburn School of Law joins us now with the details. Roger, always good to have you with us. So now this happens every year around this time. Give us an overview of this process and what all that entails.
Good to be with you, Tammy. You're right. It does happen every year. By the end of September annually, the IRS gives us guidance on the extension of the replacement period under the tax code for livestock that are sold on account of weather-related conditions. This used to be the old drought sale rules, but they expanded it a number of years ago to pick up sales on account of all weather-related conditions, including drought and flood and other things. And that extended replacement period allows livestock owners additional time to replace the involuntarily converted livestock because of those weather problems with like-kind replacement animals without triggering gain on the sale and having a pileup of income in that particular year.
So what are some of the main involuntary conversion rules?
Well, we don't pay tax immediately on the income from an asset that's sold involuntarily or that is involuntarily converted, which is the language under the code. The gain on that sale can be rolled into replacement assets and then deferred until the replacement asset is sold. And that's the idea behind the rule. So if I sell more livestock than I normally would as a result of weather-related conditions, then the gain on the excess amount that gets deferred until I buy replacement animals and then sell those replacement animals. And livestock for this purpose has a specific meaning. It means livestock that are held for draft, dairy, or breeding purposes. It does not include poultry. And it's a nice tool to avoid a pileup of income in a particular year because of weather events.
So how long is that replacement period?
Normally it's 4 years, but if there's prolonged drought, it can be extended until the end of the taxpayer's first tax year after that first drought-free year for the applicable region. That's what this announcement by the IRS is every year. These are the counties where you get another year onto that 4 years. So if you've been in an area that's had extended prolonged drought, you're not going to get hit by that 4-year period terminating while you're still in a drought. You can extend it for another year. That's the whole idea.
So how does the IRS go about determining eligible locations?
Well, it's based on drought monitor maps, and those are produced by the University of Nebraska in Lincoln, and it's always done on an after-the-fact basis. For instance, ironically, many of the areas in East Tennessee and North Carolina that have been devastated by flooding are drought counties because this was done for the previous year ending September 30th.
All right, that's Roger McEowen with the Washburn School of Law. It's always got great information for us. Appreciate you.